and this is exciting. My name is John Robinson. I'm excited to be here today and to share this information with you, with the community. Let me share my screen so we can get on with it. We've got a wealth of information that we're making available to our community free of charge. How about that? Are you guys excited about that? I sure am. And I'm thinking I'm gonna have to charge $1,000 a session. And sometimes you don't value something unless you pay for it. But we don't want money to be an obstacle in the way of people getting this information. And so we here at OIC 10K, we're very excited about bringing this information to our community. And we hear the talk a lot in our community. Well, sometimes they don't give us a break, or we don't really know what's going on and we're not aware. Well, we believe in making our community aware of the different things in the financial world so that we can make a better educated decision about our finances and about accumulating wealth. So I'm going to get started. We're talking about putting your money to work. We're talking about interest is the name of the game. And as I say, interest is the name of the game. I remember seeing different retail stores, and I'm wondering, how do they make money? They've got all these 5 cent things and these, you know, penny things, and I'm trying to figure out, how do these guys make money? You're in a furniture store and look like no one is in there. How do they make money? There's always a secret. And then you think about the banks. The banks collect a lot of money, and I'm saying, how do they do this, right? That's what a lot of us thought about, not realizing that interest is the name of the game. The banks, and we'll talk a little bit about that today, so that you can get a better understanding. But we got to get rid of some misinformation. We got to get rid of misinformation. We got to clear it out. We got to bulldoze some things. And if you're going to build any kind of building, you got to first do what they call the grading of land. You got to clear it out. You got to see what's going on. And then you got to dig your foundation. And depending on how far you want to go up, you have to go down to set a solid foundation. So one of the myths that we had in our mind, one of the misinformation that we had, was that the banks are for growing our money and for keeping it safe. And they made us believe that that's really what it was for. But these strong pictures in our minds that they helped created, they're serious about keeping their money safe. Your money, well, is FDIC insured up to $250,000. So what does that mean? That means if you have $500,000 in the bank and the bank fails, you don't have to worry too hard about the first 250,000, because the FDIC said, I'm insuring that for you. I'm going to take the role of the insurer. And so your first 250 is secure. Well, what happens to my other 250? Well, we kind of see what happens there. So it's not FDIC insured. What happens if I have $1.5 million in the bank? How safe, how secure is your money? Have we ever seen a bank fail before? We have seen savings and loans fail. We have seen banks fail. It happens. And so the question is, when it comes to keeping your money safe, how safe is that situation? And then when it comes to growing your money, we got to think about that here. And if the bank is only giving you a few, interest points, and they're keeping the rest, how much growth are we talking about? So this is what I'm offering. I believe that banks are for the convenience of moving money. I think banks are for the convenience of moving money. So what do I mean by that? I mean, you put your money in the bank, you need to make a mortgage payment, you need to make a, you need to buy groceries, you need to pay utility bills, you need to make medical payments, you need to buy a car or make all, different things, social things. You can just move your money around that way. And that is one of the main uses for banks, in my opinion. But now beyond that, there's other things that we need to do. If we're going to put our money to work, then we have to consider other things. So just let me let you know how significant it is, how important interest is in the banking industry. We see these big skyscrapers and the bank owns this building or owns so much money, and banks own billions of dollars in real estate. Billions of dollars. I mean, their real estate portfolio is worth billions of dollars. All right. I hope you guys know that. And this is stuff that you can Google. This is not hidden information. The information is there. Well, how do they get to buy billions of dollars worth of real estate? They can't necessarily take your money and do that. They need to be able to give you back your money when you require it. But the thing is, they take your money, put your money to work, and collect that interest, and they can pay their executives and they can do all kinds of good stuff with that money that they earn, the interest they earn from your money, right? And so your question needs to become, well, wait a minute now. Where is the best place I can put my money to earn the most interest, right? That's kind of like the thought process should be. But these are just a few of the big banks out there. There are several more, and they got big skyscrapers, big buildings, and they do all of that with the interest they earn from your money. Okay. And just to let you know how much interest these guys are earning, how much money they're really making with your money, I just have a little Google information here about the salary of the CEOs for these big banks. This is their salary. Like JP Morgan Chase, the poor fellow, he only got a 4.3% increase, and that brought up his pay to $36 million. How about that? Interest made from your money, right? How about Wells Fargo guy? He got an 18.4% increase. So now he's all the way up to 29 million. How about the guy from Morgan Stanley? He got a 17% increase. He's up to 37 million. I mean, that's respectable. The question is, based on, the money you have in there and how long you've had it in there and what they pay you to use it to make all this money to pay these guys, how hard is your money working for you? Right? How hard is your money working for you? And that's a question you want to ask yourself. Interest is very important. The numbers look small, but don't pay any attention to that. They work big. So let's take a common sense look at this whole thing. You deposit your money, right? And they pay you based on this information here as of January 2025. Interest rates on savings accounts range from 4.1% or 4.10 to 4.75%. It's the average savings account interest rate right now. Just a little while ago, it was 2%. A little while before that, 0 point nothing percent. But right now, we're doing great. So if when the banks were charging 5 and 10 and 7, 8% for your money, they were only paying you less than 1%. Now that they can pay you 4%, how much money do you think they're making? Right? So you got to think about, where do I grow my money? So now you can earn about 4% on your money. But if you want a mortgage, right now, the average mortgage is 7.6%. I think you're in the whole 3% right there. If you want a credit card, and I love the way they do the credit cards. They send one to you. They say no interest for 6 months. Y'all know how to do that? No interest rate for 6 months. That is called setting the hook. If you're a fisher, if you like to fish, when you go out there and you use a rod and reel for fishing and a hook, you throw the hook out there and it's doing great, and now you get a bite. Well, when you get the first tug, you can't go trying to reel that thing in. You got to let it run a little bit, put the drag on it, and then you yank it because you want the hook to set. The worst thing can happen to a fisherman is trying to bring that fish in, and the minute it's trying to get out of the water, the fish jumps off the hook and goes away. You didn't take the time to let the hook sit. So they give you a credit card, 0 interest, and you get a customer throwing around your credit card, no interest, and right about when it's set, it's real good, 22.8% interest. How about that? Auto loans, the average auto loans right now, 11.7%. Now you say, well, they advertise 0 down, 0 this, 0, 0. And yes, there's some people that get that. But the average auto loan based on Google right now is 11.7%. Okay? Personal loans, 12. I got all this information right off of Google. So this is not hidden anywhere. A lot of things are hidden in plain sight. A lot of the problems we have is that we just don't know the questions to ask. But we're losing the interest game and not realizing how it's happening. But this is how it happens. Your money make less money than what they're charging you for using your money. How about that? You put your money in the bank, they give you 4% interest. You want to borrow money from the bank, they charge you 7%, 22%, 11%, 12% interest. Isn't that fun? Interest is the name of the game. So we've got to ask ourselves, how are we going to get ahead of this game? How are we going to make this happen? All right? So where should I grow my money? And first of all, there are many financial instruments out there. And I just want people to become familiar with this. But these instruments are divided into a couple of different groups. One is the taxable group. The other one is the tax deferred group. You also have a tax advantage group. So when you're taxable group, you're talking about savings account, checking account, CDs, mutual funds, all these things. When they make money, you got to pay taxes. And then you have your tax deferred group. So now you're talking about your IRAs, your 401ks, 403bs, some variable annuities, some fixed annuities, savings bonds, and they have some other instruments also. So these would allow you to accumulate money and pay taxes later. And that's a real nice trick there too. Because if you think about it, if you were a farmer and you had to buy seeds to sow or to plant seeds, then to get a harvest, which one would you like to pay taxes on? Would you like to pay taxes on the seeds when you buy them? Or would you like to pay taxes on the harvest when it comes in? So you got to ask yourself, what situation do I want to be in? It takes about 3 kernels of corn to grow 1 stalk. They told me, because I've never planted corn, but you put about 3 kernels in each hole. And I asked, why? Why would you do that? They said, because we don't have time to go back over again, and we can't afford to put one, and that one is the one that don't want to grow. We're not taking that chance. We're going to put 3 in there. One of them going to grow. So now, imagine 3 kernels of corn to grow 1 stalk, but how many ears of corn is on that 1 stalk? So what do you want to pay taxes on? So you got to, think that through. And then there's some other instruments that you can use to grow money. And when it's time to use the money, you don't have to pay taxes on it. Those exist also. And some of them you may be familiar with that the term like Roths, the Roth products, Roth IRA, you know, and you sometimes you can get a Roth 401k or kind of that one is not that common, but a Roth 43B, Roth 457, they do exist. Then of course you also have your cash value life insurance programs that can also help you to accumulate money. And then when it's time to use it, you can access those funds tax-free if you do it the right way. So let's look at some other things about growing money. What environment are you going to put this money to grow in? So one thing is, what instrument am I going to use? Am I going to use a tax now instrument, a tax later, a tax advantage? Okay, what instrument? And that's great. Now also, what environment am I going to put this money in? Am I going to put this instrument in a fixed environment? So that means they're going to tell me how much interest my money going to earn. And usually, when they tell you, they're not going to tell you a high number. They'll tell you, we'll give you 4%, 3%, 2%, whatever on your money. That's fixed. Regardless of what the market does, you're going to get what they promise you're going to get. And then there is a variable environment. That variable environment is the environment like for the 401ks and some of those. That means your money is in the market. And if your money's in the market goes up, you make money. That's, you make money like gangbusters. But when the market drops, your money also drops. So the red line is your money, right? Market is up, make money. Market is down, you lose money. I didn't like that one too much. Then you have the index market, which you can use certain indexes like the S&P 500 and there's some other indexes. And what they say is this: you put your money with us, zero is your hero. We're going to give you a zero floor. So we're going to let you take advantage when the market is up and it's earning great interest. So that's awesome. But when the market drops, when it corrects itself, when it drops, your money's not going to drop with it, right? And that's one that I kind of like, because when I'm going to save money, accumulate money, grow money, I don't think on a table in Vegas is the best place to do that. I don't like the gambling aspect with my money. So the index says you can earn great interest when the market is up, but when the market drops, like the gray line on the bottom, your money doesn't follow it. Your money stays. And when the market is up again, then your money go up higher, with the better interest. And so that's the environment that you can choose to grow your money in. One thing is the instrument. The next thing is the environment. Oh, I got a 401k, I got a 403b. Okay, good. Is it in the market? Is it index? What is it? These are questions that we need to begin to ask. How does that work? Right? Okay, so like I said, where should I grow my money? And I just got a couple of interesting facts. And I've just asked Google, according to the studies, a very small percentage of individuals, investors, consistently win, right? So my question to Google was percentage of investors who win in the stock market. Seems like a reasonable question, right? Well, I asked that question, and the answer I got was 1 to 5%. I don't like them numbers. If it was 50% and two of us in the room, that means one's winning and the other one losing. That's what that means. Well, if it's 1 to 5% and 20 of us in the room, that means one winning and the rest of us losing. I don't like those numbers. How about you? But this is what Google says. So when you choose to put your money in the market, just got to know the odds that you're up against. All right? How about this? Percentage of people who win in the casinos. Just in case you like to gamble, I think you should know this. Now, can you believe that 13.5% people win in the casino and 1 to 5% people win in the market? I think I like the casino better. So when I want to gamble, I'm going to have to go to the casino. not the market. Why? Because you have more fun, the buffets are good, and your odds of winning looks better here. Just some interesting facts. All right. When you're gonna put your money to work, and people say, well, that index market must not be too good. Listen, guys, the index programs, they do very good in the market. There are different strategies like I told you about. You see the S&P 500 point to point. You have the global balance index. These are different indexes. And many of them don't have any caps. Like these here have a 11% cap, 2% cap. These are the two down here, no caps, right? These here participate 100% in the market. These here are 195%. You earn double over here. These are over here 245% and no caps. So the fact that it's an index program, don't think in your mind that it's not going to make the kind of money that you could make if your money was directly in the market. That's not the case. All right. Just want to point that out. Look, we have a philosophy here at OIC 10K. We believe protection is first, right? You got to protect. Wherever you are right now in life, you got to protect it. You're working, you have a job, you have a career, you have a business, whatever you've got, your lifestyle is based on the money you're earning. So you've got to protect your money, you got to protect your lifestyle. That's why we believe protection is first. Increasing income strategy. Got to know how you're going to increase your money because inflation is constantly going up. You got to increase your money. And then you have to have a commitment to savings. You got to commit to save because you got to save for tomorrow. And I'm not talking about no rainy day. You just need an umbrella and a raincoat for a rainy day. Tomorrow, savings, you got to get serious about it because you save for the challenges of life and, for the growth of the family. And it's a whole lot. It's serious. And then investment. It's important to invest, but you need to know where to invest, right? And just like commitment to savings, just savings anywhere is not good enough. What environment? What are the tax implications? These are important questions that we must begin to get familiar with. Okay? So, getting rid of misinformation. I got another one for you. All I heard when I was coming up is, hey, you want to get a little life insurance so if you die, they can bury you. Okay, news flash. Life insurance is not for funerals. Now, I know they tell us that, all our lives. Life insurance is not for funerals. Life insurance is for lifestyle protection, income replacement, wealth transfer, legacy building, lifetime tax-free retirement income. If you get a good life insurance program for these reasons, you always have funeral money. But if you spend a whole life just planning on funeral money, you may lose everything else you have because it's not protected, right? So look, I've enjoyed sharing this information. I love bringing this kind of information to our community because we have to remove erroneous information that we have been fed in the past. And so as a member here of OIC 10K, we're excited about bringing this type of common sense, basic information to our community that we can make better decision, a decision based on information and education that our families can benefit from and we can create wealth. So I'm going to turn it back over